It is very common for shareholders to take a look at a stock like Boeing and at the very first glance fall in love. Why? Two big reasons. One, Boeing is an oligopoly. They and Airbus are the only ones out there selling this product. And two, they have an order book that is absolutely full out 8 to 10 years. With all of those good things, you'd think the stock price would be doing fantastic. However, there's a lot of things that have caused it not to. Let's take a look at where this stock has gone over the last 6 years. And as you can see, before the crises in 2018, 2019, and COVID, this stock hung out between $350 and $400. Since then, the stock has averaged about $150. That's where it sits now. That's the past. Let's take a look at the numbers as to why that happened, and then look at the future to see if maybe Boeing's future is a little brighter than that. Let's start back in 2018 here and look at Boeing's heyday. You've got a $188 billion company that's doing $100 billion in revenue, and it is very profitable. They are doing 12 to 13% EBITDA margins, 10% net income margins, or just under that. And the free cash flow production on the 100 billion in airplanes they're selling, $14 billion or just below that. That is fantastic free cash flow production. Then some really negative stuff hit Boeing. What happened? Well, they had two of those Air Maxes crash due to some software issues, essentially, that slowed production down massively and hurt sales massively. And then you had COVID. Let's take a look at the bottom here for Boeing. 58 billion in revenue compares to 100. They had a massive downshift in revenue, and every single one of these profit metrics went down massively, including losing 20 billion in free cash flow. That is massive. That all ends up here in the debt pile because they have to borrow money essentially to go pay that $20 billion again. That is the negative trough that was Boeing in 2018 through 2020. Let's take a look at how it's come back since then. So as you can see, that $100 billion in revenue in 2018 is still not all the way back. $74 billion just in the last 12 months. Not expected to explode here higher until 25 and 26 when they get production rolling a heck of a lot faster. Let's take a look at the balance sheet. There is now 45 billion plus in debt. They all sit behind, ahead of us, the shareholder, and that is causing issues with profitability. As you can see, the profit metrics have gone down substantially, not just on after the debt is paid, but before. Gross margin was 19%, now 11. EBITDA margin was 13%, now it's 3. And net income margin, which was 9% in 2018, that number is negative 3% today. Free cash flow is still very negative. However, if you take a look at the future and you believe the model, things look very good for Boeing. They are supposed to push back to $100 billion in revenue. The profitability won't be as good, but they'll be producing $8 billion in free cash flow. If you compare that to $140 billion in enterprise value, you're getting a free cash flow yield that's in the neighborhood of 5 to 6%. That's attractive. Look at the EPS, close to $8. Put a 20 multiple on 8. That's 160 compared to the 150 some stock price that's trading right now, essentially. So all of these, if you believe these 2026 numbers, make Boeing a very fairly valued stock. Getting attractive here, Boeing, if they can make this turnaround as quickly as the numbers are expecting right now. Thanks for watching us at Boeing. We do like it here. I think we'd like it a lot more lower though, if it could get there, essentially down in the $100, $125 area. Thanks for hitting us on all the socials. Thanks for all the feedback. We really appreciate everything you guys are pushing to us right now. If you've got any questions on anything specific, please hit us up, and thanks for watching.